Even Trump himself has admitted that we can't balance the budget. He supported the big, beautiful bill, and he's taken the path which says that we're going to grow our way out of it. And there's only one way to get the kind of GDP growth that they're looking for, and that's massive inflation.
We haven't reacted to new inflation, but I mean, I wouldn't insist upon that.
The federal government is trapped, and of course, because he's a Democrat and because he hates Trump, Powell's not willing to play along.
This will not turn out to be inflation because we'll make sure.
The big print, and it may not be coming tomorrow, but it's definitely coming sometime before the middle of next year. The asset markets are going to look through all this, and Bitcoin's going to 400 and gold's going to 5,000. In the Genius Act, there's something that says that $3 trillion of bank reserves that are stored with the Fed might be able to be used to back stablecoins. And Trump is talking about how big they are on stablecoins. Of course, they're huge stablecoin supporters, because if there were $3 trillion of stablecoins, then those, as we all know, the stablecoin issuers are huge buyers of the treasuries, and we got a lot of treasuries to sell.
The biggest crypto shock ever is coming, as Trump and Powell just guaranteed $400,000 for Bitcoin. Larry Lepard says, no matter what, do not sell your Bitcoin. Lepard discusses the collapse of the fiat money system around the world and says there's a plan to take over Bitcoin and crypto. With BlackRock being one of the biggest players to get into the space, this will be the least of our concerns, as entire countries are now coming for Bitcoin. While Bitcoin's price spent much of the week in the red, currently sitting just over 113,400. Everything in crypto is about to change in August. In this latest interview, Lepard discusses why it's more important than ever that nation-states adopt Bitcoin and incorporate into the global economy before the inevitable collapse of the current monetary system as we know it. Let's get right into the latest interview with Larry Lepard, as he gives us his prediction for Bitcoin in the coming months and why a massive surge in capital is about to pour into the space. Drop your comments down below and subscribe if you enjoy the content we do here.
I'm incredibly bullish. What's going on in macro world is really quite amazing, and I'm not sure everybody's focused on it and aware of what's happened. I mean, just to kind of recap the last 6 months, Trump came in and they put Doge into place, and they talked about trying to balance the budget. And I've often said the one case against Bitcoin or gold as investments would be if the government ever got its act together and balanced the budget. And so Elon comes in with Vivek, and they're going to take 2 trillion out, which of course is ridiculous, and then 1 trillion, and that was pretty ridiculous too. And now it turns out it's maybe 100 billion, and it's all good. I mean, I applaud the effort, but as what they found is that Lynn's statement is true: nothing stops the train. And so the Doge effort is, maybe going to save a couple $100 billion a year, and then they come with the tariffs, very aggressively, rather poorly explained, etc., trying to solve that problem, and they immediately tank the stock market and realize we can't do that. Another reason why kind of nothing stops this train, and so he puts a 90-day tariff delay on to get the stock market back up, because he needs the stock market up. So if the stock market rolls over, tax receipts roll over, the economy rolls over. So, and of course, then the acronym TACO got coined, and so the tariffs, come and go, and then they get delayed. Now he's coming back at them. We'll see how the market reacts to that. But, and then finally, the final piece of this puzzle that I thought was very interesting was that originally Besant criticized Yellen for, going to short-term issuance on all the bonds, when she had a chance in the 2021 timeframe to term out a lot of the debt at lower interest rates. And he criticized that decision. He implied that maybe he would term them out, as well. But what we've seen very recently is that he has absolutely no plan of doing that. In fact, he's going the other direction, and they're shoving everything into the short-term, short-term bills in terms of the money that they're raising to cover the deficits. They just increased the amount of short-term bills that they're going to issue 2 times, 25 billion times 2. And he announced he's going to try and take the TGA up to 500 billion. And that's relevant. The TGA is the Treasury's checking account, and the TGA is what he's been using to buy the longer bonds when they become illiquid, or when the bond market gets closer to the 10-year, which they watch very carefully. When it's a 4.4 now. When it gets to 4.5 or 4.6, they get very nervous. If it goes to 5, they have a heart attack. And so what you're seeing is, from time to time, he's using the TGA to go in and buy buy bonds. And all of these things really indicate that the federal government is trapped. And of course, because he's a Democrat and because he hates Trump, Powell's not willing to play along. And so, you've seen this incredible, verbal attack from the president on Powell. I mean, coming out, sending him a note and saying the rates are wrong and implying that we should take rates down to, 100 basis points, to drop them by 300 basis points, take them down to 1.25 or something. And, very, very aggressively calling on him to resign, et cetera. And of course, the more he does this, the more Powell will dig in, because Powell wants to be remembered as Volcker, and he doesn't want to have the whole thing blow up on his watch. And maybe he can get out till next May. But then they came in with another strategy, which I find fascinating, which is they said, okay, well, you're not going to leave, you're not going to cut rates for us. That's simple. We're going to create a shadow Fed president. We might even appoint somebody now to be the next head of the Federal Reserve. And by the way, we'll probably pick somebody who's extremely dovish. And then hopefully what the market will do is they'll look through, the next 9 months or 10 months from now, between now and next May, knowing that when that guy gets in or gal gets in at that time, we're going back to ZERP and QE. And so, that'll juice the markets. And then I guess there's one more piece of the whole plank. Somewhere along the line in here, Percent and Trump and others kind of threw up their arms and admitted, well, this is when the big, beautiful bill came down, right? And they were going to cut expenses. And of course, the whole Freedom Caucus has disappeared. And, they ended up increasing the deficit, increasing the spending, increasing the debt limit. But Trump came around the other side and said, but don't worry, we're going to outgrow it. And so, what that implies to me, and I watched the stock market recover. I mean, I thought the stock market cracking on the tariffs was a serious crack that wouldn't be recovered from. And here we are at new all-time highs. And so I'm beginning to think that what we're looking at here is actually what von Mises described as a crackup boom, which is, they just keep printing money and finding sources of money to shove into the system. And everything goes up because it has to go up. And so anyone who studied history, as Neil alluded to, Venezuelan stock market, the Weimar, the stock markets in highly inflationary economies can do pretty well because stocks represent a claim on a business's earnings, future earnings. And so, it feels to me like that's the direction that they're aiming to take us.
Lepard says, the ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. He also suggests that BlackRock, under the guidance of Larry Fink, is currently driving the price. This move, he contends, will underscore Bitcoin's enduring relevance as an asset and its potential as a hedge against currency devaluation.
But one thing is for sure, if Trump is going to emphasize growth, he's going to need cheaper money to do it. He's already angling to get that, and he will get that. We know for a fact next May. And so my sense is, this is, the big print, so to speak. I mean, it may not be coming tomorrow, but it's definitely coming sometime before the middle of next year. And markets are forward looking, right? They don't just look at what's happening now. They look at what they expect to happen. And if we do a shadow Fed president and we continue our assault on Powell, I think there's a very good chance that the asset markets are going to look through all this, and Bitcoin's going to 400 and gold's going to 5,000. So I'm incredibly bulled up on what I see happening, because even Trump himself has admitted that we can't balance the budget. He supported the big beautiful bill, and he's taken the path which says that we're going to grow our way out of it. And there's only one way to get the kind of GDP growth that they're looking for, and that's massive inflation. And the only way to get massive inflation is to get massive growth in the money supply, which of course we all know has to be coming. And that's what my book outlined, has to eventually happen. And, they've had a lot of tricky ways of doing it. I mean, there's, in the Genius Act, there's something that says that, $3 trillion of bank reserves that are stored with the Fed might be able to be used, and this is kind of gray, to back stable coins. And, Trump is talking about how big they are on stable coins. Of course, they're huge stablecoin supporters, because if there were $3 trillion of stable coins, then those, as we all know, the stablecoin issuers are huge buyers of the treasuries, and we got a lot of treasuries to sell. So kind of wrapping all of that up, it's not coming in the traditional fashion. We don't have ZERP yet. We don't have QE yet, although they did cut the QT from 25 billion a month to to 5. And maybe if something breaks, the Fed will be forced to act before Powell leaves. But even if they're not, we know what's coming come next May. So the big print, in my view, is still imminent, and the markets, I believe, will front run it. And that's why Bitcoin's an all-time high today, and gold is bumping up right against its all-time high. So I've been telling my clients, I think we're 140 to 200, within 12 months easily. They could come back and try and tax or grab or, go after the ETFs, whatever. And so I think having self-custodied Bitcoin and that's job number one. If you want to be able to separate money and state, you got to take your money and separate it from anything that the state touches, and all the ETFs and all the companies, the state can touch them. If the state calls up Unchained and says, give us all your Bitcoin, they're going to have a problem, right? But if you're on your own, you're good to go. You can leave the country. You've still got your wealth. So to me, that's the core skill. There are a lot beyond that, I know. And you've got 16 million views. Amazing, right? You've done so much good work in this area. So I'd kind of throw it back to you. What am I missing? What's the next level after you've got yourself secured on a cold wallet? What do you do next?
He suggests transitioning to a Bitcoin standard as the world grapples with the impending crisis. He asserts that the promises made by the central banks have been hollow, leading to excessive money printing and a proliferation of poor investments. And with the aftermath of the recent inflation surge, this will not lead to a return to the status quo. He says we can expect Bitcoin to hit 250,000 this year, and then on to 1 million. But he's not the only one that shares this sentiment. Michael Saylor, Max Kaiser, and Cathie Wood all predict Bitcoin's price going from 6 figures next year and then on to hit 7 figures within the next 5 years. The halving is a key milestone for Bitcoin, as its price has historically multiplied times 10 every 4 years. He highlights Bitcoin's high correlation to global liquidity, which remains supportive even during temporary liquidity air pockets. He believes the market is setting up for another strong leg higher. Similarly, Bitwise CIO Matt Haugen supports this view, pointing to a dip-then-rip pattern, where sharp pullbacks are typically followed by massive rallies, up to 190% gains historically. Both argue that patience, not panic, is key. We'll be keeping an eye on Bitcoin's price in the coming months. What do you think about Larry Lepard's price prediction for Bitcoin and where crypto is headed in the last part of the year? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.